Hello, I'm Peter Towers, founder and managing director of BIZTOOLS. Welcome to the Accountant's Minute podcast. Transform into key strategic partner. That's the key message from our last Accountant's Minute, which I'm now going to discuss in this podcast with you. And if you have any comments that you'd like to make, please send me an email, peter@essbiztools.com.au. In the Accountant's Daily article a few weeks ago, the question was raised, is the trusted advisor status a myth? And that made me start thinking and looking around. And I was aware that Intuit QuickBooks had released a recent report which analysed what small business operators thought about their accountants and bookkeepers. And they gave them 3 choices. So I thought that was very worthy of exploring in an Accountant's Minute feature, and obviously to follow up in this podcast for you to consider. And I would love to hear from you. The accountancy profession has been proudly championing the phrase trusted advisor. The belief that accountants are the first call, the key strategic partner, and the most valued voice in an SME's owner's decision making. Is this reality or is it a perception? In an Accountant's Minute Under the Hood podcast a few months ago, ex-Deloitte partner and insolvency partner, Eddie Senatori, indicated that he had spoken to 80 accountants and 20 bookkeepers from all over Australia, and that 75% of these accountants and bookkeepers had indicated that they were the trusted advisor to their clients. There's no doubt that some accountancy firms are supplying an outstanding range of services to their clients. However, the information released by Intuit QuickBooks SMB Navigator Report 2025 offers a sobering assessment as to what SMEs really think about their accountants and bookkeepers. Intuit approached 500 small business operators from all over Australia. That's a pretty good sample, I thought. 500 individual firms were approached and asked for their feedback. And they were asked to identify what type of services their accountants supplied. And they were given 3 choices. The first one was that they would define their accountant as being their key strategic partner, their trusted advisor. And they defined that as they are a key partner in our business and our go-to professional for advice. And they are extremely valuable to our business's growth and success. The second choice was valued relationship. We have a good relationship with them and they help achieve our financial or compliance commitments, but they aren't necessarily our go-to advisor. And I took particular note of those last few words, but they aren't necessarily our go-to advisor. And then we had the third choice, transactional relationship. We have a limited relationship with them, and they are a service provider who provides a straightforward service and not much further. Now, when you look at those 3 identifications, key strategic partner, valued relationship, and transactional relationship, what would you select? What would you want your clients to be nominating you at? And I'll give you a moment to think about that. What would you want? Key strategic partner, where they're looking at you as being extremely valuable to our business's growth and success. Valued relationship, where they're saying there's a good relationship, but you aren't necessarily our go-to advisor, is what they're saying. And the third was transactional relationships. They are a service provider who provides a straightforward service and not much more. How do you vote? What do you think? Do you agree with the group of accountants and bookkeepers that met with Eddie Senatori when 75% of them said that they supplied a key strategic partner service? Well, the voting according to Intuit QuickBooks was very different to the voting that Mr. Senatori recorded. 15% of the firms that were surveyed, 500 firms, remember, 15%, 75 of those firms selected the key strategic partner. 51% selected the valued relationship. And 34% selected the transactional relationship. Now, I personally would be very concerned if my clients did not vote for key strategic partner if they were asked to assess my business. And I suspect most of you would think the same way. So somehow it would appear, and this is what Eddie Senatori's saying in articles in the Accountants Daily, that the accountancy profession's got it all wrong. Our clients don't think we're supplying this high level of service that obviously many accountants and bookkeepers do think that we are supplying. So who's right? Well, I think the people who are paying the bills are the people entitled to express the opinion. And perhaps, can I make a suggestion for the new year, or you can do it before Christmas if you wish, is send round a survey to your clients and ask them to vote. What do they think of the services you're providing? And I'm going to suggest that all accountancy firms undertake this survey twice a year from now on. January, February, June, July. Get the feedback, analyse it, try to understand if you're not achieving what I think should be the target for at least 85% response for accountants is the key strategic partner. So how are you going to go about that? Why did the opinions vary? If articles have been run in the Accountants Daily on a number of these issues. They wrote some articles, as I said, on what Mr. Senatori had to say. He said accountants are struggling to properly service and efficiently help their clients with their cash flow and business operations. And let's face it, that is probably the key area that SMEs are getting into strife. And we need to bear in mind that the Australian Small Business Ombudsman has indicated that this is the worst year ever for small business in Australia. There's a lot of problems out there. And I cannot think of any other group of people other than accountants and bookkeepers who can really come to the aid of small business operators. Sure, they need lawyers for various things, and they probably need programmers, and they need web designers, marketing people, perhaps salespeople, perhaps engineers in certain aspects. But the ongoing day-by-day processing of administrative matters in their firms, I think very clearly is an accountancy area. The big question is, how do your clients implement those services? Do they go out and employ a full-time accountant or a chief financial officer, which could end up being quite expensive? And perhaps they haven't got enough work to keep the person fully occupied. I really believe that with today's technology and today's communications, it's an ideal opportunity for accountants to be supplying the service. But unfortunately, I don't believe that the vast majority of accountants have understood what the client's requirements are. Now, there might be some difference of opinion as to whether the client's prepared to pay the money for the services, but everything's negotiable. But we need to be, I think, a lot closer to an agreement. 15% versus 75% is not an agreement, in my opinion. So Mr. Senatori conducted research. The article in the Accountant's Daily said at the beginning of 2025, so it's not that long ago, to uncover the root cause of why so many businesses are falling or facing insolvency. He conducted 80 interviews and asked them, are they the trusted advisor, which is very similar, of course, to the key strategic partner. Senatori said it was a tough reality was that trust wasn't built through infrequent transactional interactions. Infrequent transactional interactions. He said trust wasn't built through that, and I agree. Instead, it was built through deep engagement where accountants and bookkeepers spent time understanding their clients' business, their goals, their ambitions, and the specific challenges they faced. I'm going to put that another way to you. If you were the employed accountant or chief financial officer in a client business, I think you know these things. You'd understand the business, or you wouldn't last long. So you need to understand the client's business. You would need to know the CEO's goals and the board of directors, which hopefully most of them would have a board of directors or a board of advice. What was their goals? What was their vision? What were they trying to achieve? The ambitions and specific challenges they faced. Unfortunately, I think when you're concentrating on the preparation of an annual set of accounts and income tax returns, it is very difficult to have this in-depth involvement with your clients. I think what we need to achieve is that the knowledge of the client is 1 inch wide, but a mile deep. You have to really understand, rather than the reverse of being a mile wide, but only going down 1 inch. You need to understand all aspects of the client's operations. The key performance indicators or business metrics. Having analysed the cash flow forecast for the next 12 months at least, and alerting your client to potential problems, and starting to think months in advance of how those problems might be navigated. Is it necessary to try to raise capital? Is it necessary to have a loan application prepared? Not so it's a last-minute decision. And there's all sorts of problems in the world, isn't there? We've got wars being fought in the Middle East, in Europe, and there's skirmishes all over the world. And that can affect shipping details. So if you've got clients who are relying on raw materials or finished products coming into Australia, the shipping delays can be causing them real cash flow problems. Might mean that they cannot make sales, and that's going to affect cash flow. But it also might mean that a decision's made that because the shipping's become a bit irregular or not as regular as what it was, your client's going to have to hold bigger stockpiles of raw materials or even completed stock in Australia. Now, the suppliers of those goods from overseas, they're going to want to get paid. So that's going to cause a cash flow problem. and it needs to be analysed to work out if it's going to reach peak periods at certain times in the future, and is your client going to be able to finance that and navigate around that problem. Senatori said that his recent study of accountants showed that, somewhat surprisingly, accountants are still focused on tax accounting, and tax strategies. Now, I'm not going to be as blunt as Mr. Senatori was. He's an ex-insolvency partner, so he hasn't had that much experience, I imagine, in tax returns. I know they're important, having been the senior partner in an accounting firm, but one that was committed to supplying advisory services the way we now promote through ESS BIZTOOLS. But nevertheless, lodging tax returns was important for our cash flow. And I'm sure it's still important for the vast majority of accounting firms. But there are firms that are moving more and more into trying to move from, say, 10% advisory work, 90% taxation. And there's still people, of course, that are on 100% taxation. But they're wanting to move from that 90-10, perhaps closer and closer to 50-50. Although I do have some subscribers who are below the 50-50. They've reversed it. They're back to 30-70, 70% advisory services. And they're picking the type of tax work they want to do. That's up to you to decide, but I'm trying to just raise these issues with you today. Senatori posed a very cheeky question, I thought, but I'm going to repeat it because I included it in the Accountant's Minute article. One way to test whether accountants are in fact a trusted advisor, he said, was to ask clients whether they would still have a relationship with you as the accountant or the bookkeeper if, at the end of June, the government announced that the tax office no longer required tax returns to be prepared. Interesting question. What would happen? Would your clients then be coming to you and saying, we want those accounting services. We want real financial control systems introduced. We want you to be the financial controller for our business. We want you to be participating in our board of directors meetings by being the accountant, submitting the reports. Senatori believes that as a profession, we're a little bit slow in bringing real issues to the client's attention. And the clients always have an answer that they're going to get out of a problem without being a bit more forceful. Now, again, we need to remember that Mr. Senatori is a liquidator. So he's used to seeing the problems when some of these things are left a little bit long and then have to get sorted out. In all this, we need to think of the clients. So what is the state of the union when it comes to small business in Australia? I think they've got significant problems in dealing with unions and government regulations, both state and federal, all over Australia. Our clients have to battle this, and they really do not have the resources. They don't have the people working for them. But 43% of small business owners are not trading at a profit, according to the Australian Small Business Ombudsman, who produces interesting reports every 3 months or so that are well worth looking at. We have them within the ESS BIZTOOLS system. And 75% of small business owners are paying themselves less than the average Australian wage, despite the long hours and responsibilities. So what can you do to address these concerns as an accountant or a bookkeeper or a chief financial officer service provider or a business advisor? What can you do? I think you need to expand the financial, commercial, management accounting role that you're playing for your clients. I said expand it. What happens to your tax work is up to you to decide. I think in many of those business clients, of course, you'd want to continue it. But perhaps, as Mr. Senatori suggested in the interviews in Accountants Daily, the number of your clients might need to be reduced so you can provide the better service to these well-performing businesses and help them along their journey. And obviously the aim's got to be initially to help the client survive, but then thrive. And that should be the minimum objective, I think, that our clients should all thrive. And then those who wish to scale up, you will have the ability and the resources to be able to support them and help them on that journey. Because that's interesting work. And one of the real benefits you will get from that, because I hear from accountants all over Australia, is this problem of talent attraction and retention that accountancy firms everywhere seem to be having. I suspect one of the reasons is this younger generation want what they call more interesting work. They're not prepared to sit there all day doing tax returns. So we need to get some variation on the workflow to help them. And this is an ideal way because this is real accounting work. Whether it's making sure there's a weekly performance report, profitability report, and key performance indicators prepared for each business operation. Now, that might not necessarily be work that your firm undertakes, but you should set it up so that someone in the client's organisation can do that, or you get the information, you put it together. You will probably need a good office manager type person working for the client that can assemble that data. Because I think that's one of the big differences between the approach from the big end of town in running business operations and small business. And it's probably been put down because small business couldn't afford to employ a full-time accountant, and they probably can't, most of them. But today we got the technology and the communications facilities so that more advanced services can be offered. I spoke to a young accountant a few weeks ago, and he had 3 clients that he was offering chief financial officer services to, and he spent a day a week with them. And he had 2 days that he did other work, which was basically taxation. His split was 30% tax returns type work, 70% advisory. You can have that sort of style if you wish. You need to look more closely at understanding the client. This 1 inch wide, 1 mile deep review is very important at the very beginning. And if you haven't ever done it, I'd suggest you start doing it now, early in 2026. Understand your client, sit down and go through. And we've got checklists within ESS BIZTOOLS to help you do that. And some of it's basic. Who opens the doors? Who turns the lights off at night? Whose phone number's been given to the security services or the police if there's something wrong and they want to contact someone at 1 a.m. And unfortunately, these days, that seems to be happening more and more, isn't it? But who's responsible for hiring staff, setting their pay, setting their working hours? Who's responsible for negotiating with a new supplier, understanding what the terms of trade are going to be? Not ending up in a situation that was found when MYOB did their review of 1,000 of their subscribers 18 months ago and found that a lot of the new ones had assumed that every supplier would automatically give them 30-day payment terms. And they got quite a rude shock when they lodged their first order. They were asked to lodge an equivalent amount of money for that order. And that mucked up their whole cash flow approach. Making sure there's an understanding of how the debtors system works and introducing the debtors system. And making sure that the due date for payment's clearly marked on each tax invoice. And that there's a a complimentary call. I was going to say a warning call, but I shouldn't use those words. A complimentary call made 3 or 4 days before the due date for the tax invoice to remind them the payment's due. Most people are happy about that. They mightn't be that happy about making the payment, but they know they've got to do it. But the reminder has spurred them into action. And analysing the debtor's days outstanding figure, understand the importance of it. And one of the other very bits of important information that come from the MYOB survey that I just referred to was that one of the other problems that these new business operators got into is they all assumed that everyone would pay them on a 30-day basis. And they also assumed that they had to give credit to anyone that asked for it. So they hadn't been properly briefed. I've said on a few occasions, I hope they hadn't been to accountants, but I don't know. So we need to make sure our clients and our prospective clients are really getting the information about how businesses operate so that they can understand and you can really play your role as if you were the employed chief financial officer or accountant, whichever title you're happy with. I know from my experience when I was the chief financial officer and company secretary of a listed public company that the emphasis was on weekly information was vital. And we were in the meat industry. We're a major Australian meat company. And I found once I joined that industry that the whole meat industry worldwide has the same approach, weekly emphasis. But then I found later on Woolworths, Coles, IGA stores, I think all of them, but I consulted to a few of their franchisees. They're all on the same approach. They know every week. They know Monday afternoon. I'm preparing this summary to you on a Monday afternoon at about 4:10. I think a Woolworths store manager for the store would probably have his results or her results for the week up until Sunday in front of them now. And they'll be sitting down to this afternoon into the evening, tomorrow morning, talking to the various department managers. They might have 40 of them to discuss their results, to discuss their gross profit percentages, to discuss any other problems that have been identified. Stock missing. What their wages to turnover were, the key figures. How do your clients get on? Because some of your clients are potentially operating within 30, 40 metres of a major Woolworths, Coles or IGA supermarket. So those businesses inside, the hot bread, the fruit and vegetables, the meat, the fish, they could all be businesses 30 to 40 metres outside in the mall. Yet, if they're part of the Woolworths or Coles or the big store approach, that departmental manager's having a conversation with the store's general manager later today or tomorrow morning and knows what their results were. And they can sit down and do their planning. They can say, oh, that strategy worked. Wasn't that great? Now we're going to repeat it again this week. And yet your client, who might be sitting 30 or 40 metres outside, does he know his results? He might know his turnover. But turnover doesn't tell you anything unless you know the gross profit percentage. And then you need the other key performance indicators. And sit down and give him that assurance that it's all worked out. Because that's what happens. With today's technology and this communication facility, like we're talking to you now, these services can be delivered. And that is the challenge. So at ESS BIZTOOLS, we have developed this outstanding range of products, which we call the financial forecasting package, which will give you papers, articles, spreadsheets, videos, monthly updates on a whole range of products, going from that initial review to understand 1 inch wide and 1 mile deep about your client, the business plan, the predictive accounting reports, the budgets, the cash flow forecasts, the key drivers analysis, all those key sub-accounts, debtors, stock, creditors, capital expenditure, to make sure they're just not hidden within the budget process. So they're there so they can be analysed each month to see whether the expenditure's gone over what it was planned to be. And then, of course, the projected balance sheets. They're important. The weekly performance reports, the whole rhythm of meetings, daily, weekly, monthly, the monthly financial accounts, your monthly report to the leadership team, to the board of advice, to the board of directors, whatever your client structure has in place, as if it was a bigger organisation. Analysing the reports, the trends, where's it going? And more importantly, what's the cash flow projections going forward look like? Where are the hiccups? And then the process gets repeated again the next month and then the next month, so that a problem that is caused last week is investigated on Monday night, Tuesday, Wednesday, say, and it's the answer's found. Or what happens in bigger businesses, they bring in a relief manager to run that business or that aspect of the business to find out what the problem is. And there can be all sorts of problems, of course. But the key is to find out what they were and to fix the problem so it doesn't continue. Because the Australian small business results are saying that these problems are not getting fixed. The Ombudsman is saying this is the worst year on record for the small business community. Who's going to do something about it? I don't think the government is. I'll concede they've got a lot of other things to worry about, but they should be. They brag about the great exposure of small business in Australia, but it's not a very good report card, is it, that I gave you before? And Eddie Senatori is saying we should be supplying greater services. Well, he joins a number of other key industry advisors. Those of you who have heard me presenting these discussions will know that every so often I have Andrew Geddes join us. Andrew Geddes, I think, is the outstanding trainer of accountants in Australia. One of the original joint founders of the Financial Management Research Centre, an organisation probably before its time that was established over 40 years ago at the University of New England in Armidale, with the support of the Institute of Chartered Accountants and the Australian Society of Accountants, which is now the CPAs. And that was to encourage accountants to be more proactive in the actual assisting in their management of their businesses for small business operators. And I conducted a podcast with Andrew Geddes about 6 months ago, and I asked him the question, was the original aim of the Financial Management Research Centre achieved? And his answer was no, it hasn't been achieved. We wouldn't be having the type of discussions that we're having now and Eddie Senatori's raising if the vision of FMRC had been achieved. Because this emphasis on tax doesn't help anyone run their business. Not at all. It's too long, 12 months, but then there's the delay after the end of the year, isn't there? How many of your business tax returns have you completed by today? Nearly the end of November. I think you've probably got a lot more to do yet. So if your client's waiting on getting that annual set of accounts with their tax return as being the guide to them as to how they went during the year, it's a long time after an event if there's been a problem. And the results that the Ombudsman for small businesses referring to would indicate to me there's a lot of problems. And that's what Eddie Senatori's saying. As a liquidator, he's seen a lot of problems that he thinks accountants, if we'd been more active or been involved or perhaps been invited by the clients, and there might be some clients, of course, saying, no, you're not talking any of that. But there's been a lot of people get into difficulties. can we assist them? I'd like to think that you could utilize the tools that we've developed within ESS BIZTOOLS. Now, I've got a special offer to you. Originally, because it's Black Friday, we were going to offer a 50% discount. But when my think tank of my marketing manager and my other marketing team members sat down and we discussed it all, we looked at the Ombudsman's report, we read what Mr. Senatori had said, and we read various things that Andrew Geddes has been saying for some time about accountants not properly supporting SMEs. And therefore, we decided to add another 25% discount as our contribution to the Australian accounting industry to say, let's get started. So we have a 75% discount on our product packages, available until the 5th of December. So that means that our major product package that I've just been talking about, financial forecasting, that normally costs $4,100, is available to you for $1,050, including GST, for a 12 months access. And you receive 10 training sessions on a group basis throughout the year. You receive a weekly newsletter we call Business Plus, whereby we write articles that you then badge and send to your clients that is trying to inform your clientele that you can do more than tax, that you can talk to them about their cash flow problems. You can talk to them about perhaps raising capital as an early stage innovation company or a crowdsourced funding equity raising company, or looking at why they need a debtors management system, or looking at succession planning, or starting a new business somewhere else. All of that's included within the ESS BIZTOOLS package that you will then have at your fingertips to use. You have 24/7 access to utilize the system. Please go to our website, www.essbiztools.com.au, and have a look at the product packages. Just go to packages and pricing. I hope you will join the ESS BIZTOOLS team in our campaign to make it easier for accountants and bookkeepers to get involved in trying to overcome this real problem that small businesses are confronting in Australia. To make the Ombudsman, and there's a new one to be appointed, I gather, reading the media, the new Ombudsman to say, we've turned it around. Small businesses are performing better, but that's going to take a couple of years, and you're going to need resources. We can supply you the resources. And I think our key objective as a profession should be, and I want to finish where I started, the key strategic partner should be the recognition that we all obtain from our clients. You, me. We need to have our clients saying we are their key strategic partner. Let me read those words that were included in the Intuit QuickBooks survey, the SMB Navigator Report 2025. You should get it and read it, please, because it's got some very interesting information. There's a lot more in it than just the bits and pieces that I'm picking out. There's a lot of very interesting information. Key strategic partner. Excuse me. They are a key partner in our business and our go-to professional, very important words, for advice. And they are extremely valuable to our business's growth and success. I think we all should be putting that onto your notice board and on your screens to all of your team members saying, that's the vote we want from our clients. And I'd urge you to be undertaking a vote with your clients twice a year and keep the records. Very important business health check on your business to be conducted. And obviously, if you don't achieve a very high rating, and I think it should be 85%, You need to then start talking to those clients and understanding what else do they want from you. And I think you are entitled to say, well, the cost of that will be this, and get the reaction. Because people running businesses are aware of the problems. They're looking for assistance. I hope to hear from you soon. Stay safe. Have a great day. Goodbye.